Do you like companies with deep moats? Do you like unique businesses? This one, which we are going to analyze today, Mahima and myself, will be one of those. Welcome to KYC. Thanks for tuning in. We're going to today deep dive into BLS International. We've been itching to do this actually for a while. Mahima's bias has stopped me from doing it, but nonetheless, we've managed to pull them together today. So let's quickly start off with what I want to know. I'm going to first try and understand what the volume growth is going to be like, because volume growth in FY25 was extremely strong. Can that sustain? Also, while I've not written it here, pricing, how is that evolving? Because again, we've seen very strong pricing growth in FY25. Mind you, BLS International is in the business of visas. It's very similar to the business that VFS does. If you've been to a VFS visa center, you'll know exactly what they do. So a clear competitor to a VFS. So you'll understand what I mean by a volume growth and by a pricing growth. More people coming in for visas will mean volume growth, and whether they have the appetite to increase the price that they charge to each person walking in will be value growth. So both of those will determine how the top line growth for this company evolves. Now, the second piece is new centers. How have they contributed? There are two levers here. One is you have existing centers which are getting self-operated by a BLS International. There are cost savings which are accruing and which is enabling them to do better EBITDA. And the second is they're opening up new centers, which is allowing them to have more customer walk-ins, and the volume growth that we just spoke about is being driven by that. The third piece is there's $1 billion of tenders which is up for grabs. It's a 2,000 crore top line company. So $1 billion can move and shake pretty much everything. Now, all of those should actually come up for renewal over the next 12 to 18 months. These are opportunities for BLS International, either to renew or bring in new clients. What's the success rate like is what I would want to understand on these renewals. Now, chunky customer concentration. This is a risk. The Spain visa that they actually have rights to is a chunky customer. If it were to go away, that is a key risk. What are they doing to hedge for that risk is what I want to understand. Efficiencies emanating from acquisitions. They've acquired a Turkish company called iData, which allows them access to nearly 20 countries. And that is a positive. It's a big positive. But what does this do? And how quickly do the efficiencies start to drive through? This has contributed to around 20% of the absolute EBITDA growth of FY25. I'm trying to understand whether this acquisition has still more efficiencies left to squeeze out, and which will drive EBITDA going forward as well. What are the global opportunities that they are looking at in other businesses? Mind you, BLS International has also ventured into some other businesses. Logistics, for example, caters to banks, goes and helps banks out with regard to where senior citizens are concerned, providing banking services at home. So some of those, and they're looking at global opportunities in similar businesses as well. I'm not sure if banking is the one they're targeting, but nonetheless, they are looking to diversify. So what are those opportunities coming in from abroad? And this is the big one, competition from VFS. VFS has a name, has a brand, has scale, has technology, all of that, which is much better than a BLS International. It's also unlisted, mind you, and it is Blackstone backed. So when you have that kind of a competitor, can you continue to sustain the kind of numbers that you have? Last off, usage of cash and the return ratios. There's plenty I want to know about this company. So probably we'll do a longer chat with the management, but how are they going to use the cash? What are the return ratio goals going to look like? They're guiding for a 30% ROC. Can they continue to clock that is really the question. Right. But I'm going to toss it over to Mahima, because she's going to explain exactly what BLS International does for you guys.
Right. So basically, as Harsh rightly mentioned, the two kind of services that the company provides is first visa and consular services, and the second one is the digital services. To talk about the visa and consular services, basically it's one of the largest player globally, providing the government to citizen services, and has built trusted partnership with embassies as well as governments worldwide. Plus, it's a 19+ industry experience that they have, and they've built a broad network spanning across across 70 plus countries already. Plus, it has global offices working for government and diplomatic missions. The core services include outsourcing of visa processing, document verification, attestation, biometrics, e-visa, etc. And providing citizenship services also include your passport renewal, your document authentication, legalization, citizenship renewation, as well as citizenship renunciation and notary as well. So these are the kind of services that the visa and consular services bracket includes. But in terms of the digital services, basically that is providing digital as well as physical again, government to citizen, B2C, B2B services at grassroots levels in India, and this includes your services. Of course, this is one of the leading players in the services like business correspondence services, as well as it includes your e-governance services and assisted e-services as well. So that's the digital part of the business. Now, in terms of how they operate, overall they enter into long-term contracts. So your most of their contracts are exclusive and are long-term in nature. So that includes your 5 to 10-year contracts. So that is an important one. In terms of their overall network as well, as I mentioned in the start of the show, that it has a 70 plus countries network that it is operating in. There is 46 plus government clients across the globe. There is 19 plus years of global experience plus 44,800 business correspondents across India. There is 1,42,000 plus touch points for their e-services and 1,000 plus store spread across India. So that's the overall network that they have in India and across the globe. In terms of their subsidiaries as well, they've got BLS International, where there's 100% holding, which is your visa and consular services, and there's BLS e-services that takes care of the business, the digital part of the business. So that's everything that one needs to know about the counter as to what it does and what it actually is into providing services like.
Now, I want to just add a little bit here. So, of course, there are 45 countries that BLS International operates with. But what's the scope like?
Correct.
How large is the opportunity? So, VFS does 140 countries. Correct. So, that's how large the opportunity is. But, of course, VFS is a very strong competitor in those terms. So, yeah. So just want to kind of cover that as well. But, let's not delay this. Let's quickly look at the metrics that we'll cover this morning for you. We'll start off with the income statement, the balance sheet, the cash flow, the return ratios, the shareholding, street cred, street coverage, as well as valuations and guidance. We'll try and cover all of that. With street coverage, we'll also cover guidance. I'd like to keep valuation as point number 8 if we can. Street coverage and guidance will be point number 7. And there are reasons for that. You'll get to it. And we'll thereafter speak with Shikhar Aggarwal, who's the Joint Managing Director at BLS International, to talk to us about numbers. Mahima, I want to start off with the income statement. Right, so
income statement definitely is a thumbs up for this particular counter. I mean, if we take the trajectory in terms of the revenue, it's grown from 850 crores to almost over 2,100 crores in 2025. From 2022 to 2025, it's seen a 3-year CAGR of 37% in terms of the revenue growth. The EBITDA growth has also been significant, a 3-year CAGR of 80% from 107 in FY22 to almost 629 crores in FY25. In terms of margins, significant amount of improvement there as well, constantly increasing from FY22 at 12.6% to 28.7% in FY25. The net profit trajectory has also been, has seen a good growth, a 3-year CAGR of 69% from 111 to almost 539 crores in FY25. In terms of the revenue breakup, just to give viewers a perspective, the two businesses that I talked about, the visa and consular services is 75% and your digital services is about 25%. And the volumes that Harsh was talking about is also significant in terms of the visa volumes. It's seen a growth of almost 31% in FY25 itself. In terms of new applications also, net new applications also, that also saw a growth of almost 35 odd percent. So, overall a very good picture when it comes to their overall income statement. So a thumbs up there.
Yeah, and we will tilt more towards the more material parts of the business, which is visa and consular, because that's where a bulk of the revenue comes from. That's also a more insulated business compared to others. So, and less competitive. Of course, there's VFS, but less competitive in relative terms. Let's look at the balance sheet very, very quickly. Again, looking very healthy from a balance sheet standpoint. I want to cull out 2-3 points here. The borrowing number is at around 180 crore. It's a 15,000 crore market cap company. So really no concern where the borrowing is concerned. There's a small spike in the short-term borrowings to 25 crore rupees. That's likely a payables number which is reflecting, which is also in fact impacting the cash flow positively, of course, given that it's a short-term liability which reflects. In terms of the cash balances, it's at 740 crore. So on a 15,000 crore base, it has 740 crore of cash. 5% of its market cap is sitting in cash on the balance sheet, and it does this regularly. It generally has anything between 450 to 750 crore of cash on its balance sheet. At least that's the trend in the last 3 years. So something again to keep your eye out on. But it looks like a healthy balance sheet, no concern. Where they invest cash is something Mahima will likely cover.
Right, and I think, as you rightly mentioned, the cash is enough to cover their debt. So I think that's not at all a problem there.
Correct.
But yeah, talking about cash flow, well, it's a thumbs up here as well, because overall cash flow from operation has seen a significant amount of jump in the past 3 odd years, from a 261 crore to almost 829 crores. So that's a good number there, a healthy number there. And cash flow from operations to PAT also, that's a good ratio overall if we see. In terms of net cash flow, FY25 was negative because they've invested a big chunk of amount in buying that iData part, and overall also they've done some investments in fixed asset purchase as well. So that's why it's a negative number. Otherwise, it's not a concerning part. Overall, a healthy cash flow statement. So thumbs up there as well.
And they generally use these cash balances to acquire companies.
Internal accruals,
it's a general part of the way they do business. So you'll continue to expect that to happen. So if you don't like that part of the business, something you should know, that they invest in acquisitions all the time. The question, of course, you should be asking is what do they do, or rather what do these acquisitions yield in terms of return ratios? And let's quickly point that out to you. Let's try and understand what the return ratios look like. There you go. Very healthy, right? Of course, it's fallen from the 28% high of FY24, but a 20% plus ROC on a consistent basis over the last 4 years just kind of brushes off any concern in terms of capital allocation that the company is making. Can we have the ROE ratios as well? And I will try to pull them out as well. There you go. So that's the ROE. So ROE, in fact, just increasing sizably as the years have rolled by. We're now at 30% plus. Question will be, is this sustainable? But shareholding, Mahima?
It's been on the constant rise, so it should ideally be sustainable, and that's something, of course, we'll ask the management as well. But in terms of shareholding, it's a well-held company. Promoters have slightly reduced their stake from that 74% mark to a 70% mark, but it's a well-held company overall by promoters. A 70% holding is more than decent. In terms of FI holding, slightly gone up in the past 3 years from a 7.5% to almost a 10% mark there. In terms of DI holdings, not much of DIs are holding this particular counter. The March 25 number indicates a 2% odd holding by DIs, and public holding has remained constant from 17% to it went to around 19.6% by March 24, but that's again come down to around 17 odd percent. But overall, promoters have faith in the company, and that's been shown because it's a well-held company overall, because they hold around 70 odd percent. So a thumbs up there as well.
Yeah, the spike in the number of shareholders surely might raise a few eyebrows. But, a couple of things which we missed speaking about, Mahima, before this show. 16th Street has been increasing stake in this company, which is a positive. LIC is one of the DIs which have added a 1% stake in the quarter ended March 2025. So that's the other thing. Two things that you should look out for, because, again, two interesting investors have bought in, and that kind of indicates or gives you some kind of direction as an investor. Let's also quickly look at how the street cred is and what has the stock done. Of course, in the short term, there's been some pain. 1 month down 2%, and even over the last year or so, as the graphics roll, you'll see. But over the year or so period, there has been pressure on the stock. But when you're looking at the 5-year picture, there's been a very strong rally in the stock. So 5-year performance has been outstanding. We've given this a neutral, of course, given that the longer term performance is strong and the shorter term performance has been difficult. But street coverage.
Right. So
And
in
guidance.
terms, so in terms of street coverage, there's not a lot of analysts that cover this counter, and that's one of the reasons as to why we are staying a little cautious in giving it a neutral rating. There's just one buy with an upside potential of 68% as per what Bloomberg suggests. So that's with regards to where the street coverage stands. But guidance, of course, a strong guidance. The management is confident of sustaining the 30% plus margins in the visa and consular business segment. But we'll have to wait. We'll have to go ahead and ask the management with regards to the blended margin for both visa as well as the digital business. They've said that they're at least targeting growth anywhere between 15 to 20 odd %. And the one interesting part that I saw in their con call was that they are saying that they'll continue to evaluate acquisition targets because they are seeing some potential counters which they can go ahead and acquire. So we'll also ask them as to which of these counters are in which area are they going to go ahead and expand in. So this is with regards to where the guidance stands, Harsh.
Right. Now let's pull out valuations. Probably one of the most important metrics. When you're looking at valuations, it's currently trading at 31 times trailing 12 months. FY26 is roughly 24 times. So 1 year forward, they've guided for around 15 to 20% growth for some time in the future. And therefore, we've kind of just extrapolated that valuation. But it's also basis the average Bloomberg analyst, which is just one analyst covering the stock. So the 5-year average in terms of price to earnings is 30 times. Doesn't look particularly expensive. But at the same time, you want to be cautious because there are no competitors and there is VFS, which is a big unlisted competitor of this business. Now, I want to also quickly cover analyst recommendations. Just one buy call on this one. Potential return means 68%. Again, we'll give this a neutral. We'll be cautious about this because there's only one analyst covering it. So we've given this a neutral. The total rating, let's quickly stack it up and let's give you a summary of all of the metrics we've spoken about. That's of course the street coverage, but income statement, balance sheet, cash flow, all of those were a thumbs up. Even return ratios a thumbs up. Very impressive across the board with regard to that. Shareholding is a thumbs up, 70% held. Street credit, street coverage, valuations all in neutral. Comes to 6.5 on 8 with no thumbs down with regard to where this company is concerned. Let's quickly go across. We have Shikhar Aggarwal joining us, Joint Managing Director, BLS International. So I want to first understand from you. Firstly, welcome, good morning. We're in a rush because we're crunched for time. I want to quickly first understand from you, what's the tender pipeline looking like? What's the win rate that you have? How many of your clients currently are up for renewal in the next 12 to 18 months? Is there a concern on that count? Give us that perspective.
So I think I can start that off with telling you the 5-year trajectory. If you see last year, our revenue has grown by 30% and our profit after tax, which is what we actually see, is grown by 66%. So we have delivered 540 crores of profit last year, which was a 66% increase compared to the year before. If you see the volumes, there has been a steady growth in volumes over the last 5 years. We have delivered 4 million visa applications last year. Now we are proud to say we work with more than 40 client governments across 70 odd countries, around the world. As you see, in the last 1 year itself, we have won more than 10 new contracts with different client governments. Over the next few years, we've been telling, there are multiple client governments, coming out with new tenders from the existing market. There is upwards of $2 billion tenders that are coming up, wherein our competitors are the incumbent. Regarding our revenue, we have already renewed most of our contracts. So we have a clear visibility for 5 to 7 years at least. Some of the contracts that we have won are for 10 years. So we have a clear visibility on the potential of revenue that we have. And on top of that, the growth in the market, if you see, we have just captured 17% of the market. And if you see the growth in the market, there's at least 14% growth that is happening every year. And this industry by 2029 is poised to become a $3.5 billion industry. So that is why we see a major growth for us coming in.
So, sir, $1 billion of potential opportunity over the next 12 to 18 months. How much of your clients are up for renewal? How many rather? Apologize for that. But in terms of contract size, and what is the potential for you? How much are you expecting to win out of this $1 billion?
See, 90% of our contracts we have already renewed in the last 1-2 years. So we have a clear visibility on our existing revenue. All the contracts that are coming up for renewal are newer contracts, some of which our competitors are incumbent. Some new governments are going to come out with tender, which they have not outsourced till now. So we expect now governments are taking note. They want to divide the world into multiple players. So we feel that we are a well-established company now to take this market share.
Okay, Mr. Aggarwal, hi, Mahima also joining in. Always a pleasure speaking with you. You just mentioned that you already did a 30% growth in terms of FY25. Your guidance is the growth between 15 to 20 odd percent. Do you think that you'll be able to cross that 20% mark, and if yes, by how much?
See, if you see the past of the company, we have delivered 70% CAGR growth. Obviously, the base of the company has now become bigger, but if you see the global market share that we have, which is 17 odd percent, there is, we were at 5 to 7% 10 years back. We have grown to 17% now. So I think there's a big scope for growth in terms of market share. Even the market, as I said, is growing by more than 14% every year. On top of that, new governments are outsourcing newer things. Our prices are increasing. So definitely we feel, with the increased base also, that we can deliver at least 20 to 25% growth over the next 5 years. On top of that, as you see, we are still 900 crore plus net cash company. We are looking at, we acquired 2 companies. We did 1200 crore plus acquisitions last year. When we acquired iData and Citizenship Invest, we continue to look at different acquisitions, which can be synergized within our company. So definitely we feel that, the guidance that we want to give is quite reasonable, that you want to do 20 to 25% growth over the next 5 years. But definitely, on top of that, newer contracts, acquisition, etc., we will be striving for more.
And what area would those acquisitions be in?
See, normally we are looking at government business. We understand the user pay model. So citizenship services across the world, there is multiple services that are yet to be outsourced by developed governments. So definitely in the government to services space, we are looking at visa outsourcing and allied services.
How is competition, Mr. Aggarwal, in this space?
See, competition around the world, there are limited companies which are qualified for these tenders. Before we came into the picture, there was a big monopoly. Over the years, we have been able to increase our market share, but governments need trusted players. So we feel that we are delivering work across the world now, and governments need more players. So we definitely feel we have a big upper hand right now in growing our market share.
Okay. Mr. Aggarwal, your margins have constantly been increasing. FY25, the blended margins stood at 28.7%. You've said visa and consular services is where you'll maintain 30% plus margins. But overall, I want to know, 2 years down the line, considering that your digital business will also scale up, where do you think your blended margins will go to?
See, if you see the margins in our visa business, they have gone from 21% to 28% and 34% now. And our blended margins are around 28%. Definitely in the digital business, since it's a volume-driven business, we are generating good amount of profits, but the margin per application is a little less. We also acquired a business in our digital business, which has a big revenue, but less margin. So I feel the margin in the visa business, our immediate target is to maintain even at an increased base. Our blended margins might come down a little bit because of digital business in the near future, but in our visa business, our margins are going to sustain.
Do you believe ROE's ratios can sustain above 30%, sir?
I think definitely, we are striving to sustain all the growth that we have achieved, all the ROE ratio also. We are definitely targeting to sustain all of that.
Interesting.
Okay.
Mr. Aggarwal, just want to get a sense, will this mix change, the mix between visa and consular and the digital business? Right now it's 75-25, but going ahead, how do you expect that to change, or will it remain the same?
See, in the visa business, as I said, the opportunity size is huge. There are multiple tenders that are coming out, newer governments that are outsourcing, newer services being outsourced. So definitely, I feel there's a major growth expected in the visa business. On the same time, in the digital business as well, there is a different trajectory of growth. We have doubled our profit from last year, in the digital business as well. And there's a big growth expected. So I feel, in the long term, the ratio to remain the same because we expect growth coming in both the companies.
Okay, thank you so much, sir, for joining us, giving us that perspective. It's been very interesting understanding the business as well as the nuances from you. Thanks for coming and speaking with us. But viewers, frankly, completely out of time on this edition of KYC. From Mahima, myself, everyone who puts the show together, thanks so much for watching. Hope you found it helpful. Stay tuned to NDTV Profit.